Hello and welcome everyone to the Commodity Report for the 19th of August 2022, presented by myself, Phil Carr, at the Gold and Silver Club. So we've just had Brent crude oil prices break out 6% in the last 24 hours. We talked you through this at the beginning of the week that we were looking to accumulate at the lower end of the recent 6-month lows. We've done that over the course of the last week. In fact, we built into 6 new positions. We've managed to bank now partial profits with our clients at the Gold and Silver Club for over 400 points on Thursday, alongside another 230 points banked as well on the dollar index. We talked you through this as well on Tuesday's commodity report. Essentially, we have started to build into dollar long positions and also continue to accumulate crude oil at the lows. Alongside, of course, last week we banked over 2,000 points on gold, 500 points on copper and 185 points on silver as well. Now, over this week, it has been a historic week for energy prices. Natural gas prices in the UK and Europe, they have surged to all-time highs. In the last year, natural gas prices, they're now up 350%. That is the equivalent of crude oil prices trading at $400 per barrel as we continue to go through the energy super cycle. And we're not even hitting the winter period yet where we get peak demand. At the moment, what is driving a lot of demand is the additional usage of air conditioning units as we continue to go through a heat wave in the UK and Europe. So I do hope that you've managed to capitalize on these moves, certainly over the last week. Again, going back to Tuesday's report, here is us just detailing out to you where we're looking just to accumulate additional positions on energies over the course of this week. So right now we have gold trading around $1,775 per ounce, but I'm not looking to buy at these levels right now. You have to remember we were very early to this trade. We were buying all the way down towards the 1700s. Our main objective at the moment is to continue to scale out of profits here over the next week. And we have also started to rotate some positions into the dollar as well, and also into oil, which is currently breaking back down towards the swing lows, which we perceive as an area of accumulation here. So we've essentially now seen over a 500 point breakout from the low to the high in Brent crude oil over the last 24 hours. We've of course seen natural gas prices breaking out to all-time highs. Also, as we detailed out to you at the beginning of the week as well, our expectation was gold could be under some pressure. We definitely do not want to be buying gold at these levels. The minutes of the FOMC on Wednesday, they further propelled the dollar higher where we have exposure right now. And that also caused a dip lower on gold, on silver, where we were locking in further profits last week. Now, typically, once you start to rotate into the month of September, this does tend to see more dollar strength. And of course, with commodities, the metals in particular, priced in US dollars, this is where you can see the consolidate to lower. And I would effectively be looking at even better opportunities to buy at lower prices in the month of September. Again, we've got in very early with the metals here. We've been buying gold down towards the 1700 level, locking in profits last week on the CPI data when we saw the breakout up towards $1,800 per ounce. Similar on silver as well. We locked in more profits last Friday when we had the breakout back to 2-month highs. So we managed to lock in further profits with our clients on silver for 185 points. This week, actually, silver prices, they've rolled over by $1. I am still expecting higher prices on energies and certainly copper as we transition between now and the end of the month. But there are other metals that can typically come under pressure, such as platinum, when you start rotating into the month of September. Now, with respect to hedge funds and money manager positions, in the last week, we've seen a slight change here, of course, in the lead up to last week's CPI data. So what we've seen is essentially a slight reduction in net longs with energies, which was a good opportunity this week to reload. In fact, we did see a 9% increase in net longs with gold, but gold did break out to 1800, which was a great opportunity to scale out on more profits. Silver net longs also increased, and we saw silver break out to 2-month highs. So really the playbook now going into next week is all eyes will be on the Jackson Hole Symposium and of course the future monetary policy guidance, which will come as a result of that in the lead up to the September FOMC statement as well. All eyes will be on this as we head into next week. And of course, over this week, we continue to capitalize on the super cycle we're seeing on energies, everything from European to UK to US natural gas prices. They've broken out to all-time highs, and this has further accelerated the move higher as well for crude oil, which we've benefited from massively at the end of the week. We've seen yet another end of week rally for crude oil prices, where the playbook more recently has been to accumulate at the start of the week when you're breaking back down towards the swing lows. We saw oil breaking back down towards 6-month lows at the beginning of this week, and then subsequently have over a $6 rally to the upside. So if you're not making money at the moment, you absolutely should be. There's been so many great opportunities just to capitalize on the volatility. Remember, right now, it's not a buy and hold market. It is a trader's market. You want to make sure you're regularly locking in those profits. This enables you then to rotate the profits into other commodities and then capitalize on the dips like we've seen in the last week on oil prices in particular, which has played out tremendously over the last 48 hours. So with that, of course, if you would like to learn the research-driven approach to the market, ditch those outdated technical analysis strategies or gimmicky technical indicators, it's 2022 where you want to be utilizing data. Utilize data, statistics, market intelligence. Alongside that, learn and understand the daily, the weekly, the monthly, the quarterly cycles for each commodity, the capital flows in the market, the intermarket correlations, the ratios in the market. Learn and understand the narratives aligned with the fundamentals, the macroeconomics, the geopolitics, the key areas of liquidity in the market, and of course, also further compound that with how the hedge funds, money managers, banks and institutions are positioned in the market. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.